Ladies and gentlemen of the crypto space, we're live on Monday, November 15th at 11:23 a.m. A couple minutes early. It's good to be on schedule today. Back in action after Thursday and Friday of last week off. Needed a couple of days. But I missed all you guys. You guys give the best questions. We have the best discourse. This is awesome stuff. Got to keep everyone up to speed on the markets. Helps keep me up to speed on the markets. So we're late cycle. What's that mean? Drawdown expectations. I'm expecting some drawdowns. I mean, if I look at the charts, we're seeing some significant drawdowns. Let's talk about these drawdowns. What does it mean? How does it compare to markets that we've seen over the last couple of years, or market states that we've seen over the last couple of years? Are we doing the same thing we've done over the years? Are we doing something different? Maybe we're doing something different, but we're also doing something the same. What the heck does that even mean? I don't know, but it sounds good. So let's look at some charts. Let's talk to some friends. Let's see what you guys are thinking about. Let's get the stream started. Let's pop it over to the main screen. I got Convex up. So this was obviously the Moki event, whatever the ultimate significance of that is and how it plays out. Obviously, their convex voting weight is being voted on, and I believe it's been rejected at this point. But they still have a massive supply, so it was a big buy and the mega dump. So whoever bought, someone bought up here. Or maybe it was just someone sold. I would imagine someone bought as well, but they're talking about a drawdown. What is that, a 50% drawdown almost? Let's put the price measure on it, and let's see how painful this is for someone. Someone's sitting at a 40% drawdown in a matter of a couple of days. So what does that mean? 50%, 60, 70, 80% drawdowns on the market. Bearish times, 2019, and everything just seemed to go down. Sell the rips, as you would say in a bearish market. We haven't seen a bearish market in legacy finance in quite a while. It's been years in many regards. Buy the dips. That's the market. And that really is, in many regards, the market that we've seen in the crypto space for the last 2 years, March of 2020, ever since the large deflationary impulse. That was the last major drawdown we saw in crypto. And I wouldn't even consider. That's funny. And that's how extraordinary the crypto space is. A 40% drawdown is not a major drawdown. Does it look bearish to you? It's not a major drawdown. This is a correction. That's how you have to process the volatility in the crypto space. Look, this is clearly not a drawdown. Drawdown would be a mean regression down to the 100 SMA in the daily. Be $14. That's a drawdown. That's a mean regression. That's 70%. And that's just to a moving average. Dare it fall down to a price support, something like that. An 85% drawdown, and then it sits there first. Why would it sit there? So I constantly think that to myself compared to the market of like 2019 when it was a very bearish market. Why would a price draw down to 85% and just sit there? What kind of significant change in market sentiment, capital flow, and the overall macro narrative? What kind of change would be required to such a degree that would cause price to sit there at an 85% drawdown for an asset like this? I just don't see that being rational. And that's the only way to target these markets and attack these markets is rationally. It doesn't make sense. So that's really why I see these markets as attackable from a Buffett standpoint. Buy the blood, buy the blood, buy the dip. I mean, that's really all Buffett does. He buys the dip. He gets cheap capital at the top, at the highest valuations possible. They let him borrow capital, and his cash flow. He accumulates cash flow, and he buys the dip. So he's a dip buyer. That's all Buffett is. He's a good dip buyer. Dan's in the house. A pleasure. Any thoughts on the Forex market pools on Convex for building CRV, CBX, and keeper positions? Well, it's pretty cool what Andre did, and it's finally getting attention. I never bought a large position, but it's up like 300-400%, so I'm definitely not complaining. Let's take a look at what the revenues are like for Oh, sorry. Nope. That explains why it's not working. Hello. Reload. So his fixed forex positions are cranking out a lot of yield. And then if we go over to, there it is. That's fixed forex. Yeah. Continue to app. Great. Curve LPs. Where's the incentive? What am I missing here? I don't know. I'm pretty sure they're incentivized, aren't they? Or is it just here that you can see the incentives? Yeah, 20%. 20% additional incentives. Wow, 32%. Well, Barry, here's the problem with fixed forex. Um, your folks are interested in taking on a GBP, a pound position. You got to remember the pound's getting. Now you got to look at forex charts. Now you're looking at um, USD GBP, and now you got to understand a bit of forex and how those markets trade. Because you're not talking about now you're talking about a stablecoin market relative to U.S. dollar price point. Clearly, it's not forex markets, and you're talking about forex markets from a price point standpoint, and that's really one of the most exciting things about the crypto space right about now. And I call it the stablecoin narrative, where you're able to trade fiat derivatives 24/7. It might be the biggest narrative in the crypto space, which is something I've been talking about. And obviously, we see people finally catching on to what Keeper is, what Andre's been working on, and that's crazy. JPY, Korean won, Australian dollar, the British pound, 24/7. Absolutely incredible. And the yields to top it all off. So these are getting how much liquidity? How much is here? 25 mil, 36 mil. And that's nothing to sneeze at. Um, it's obviously closer to zero than it is to where the forex markets are in the real world, but that's another story. Hundreds of trillions of dollars of fiat floating around. And we're talking a couple mil here. So it just shows you are where we are, maybe not late cycle. So that's the battle in my mind. Are we late cycle or early cycle? I mean, let's take a look at one of my favorite charts, Curve. Let's take a look at the weekly on Curve. So clearly this is brand new asset. It's a brand new asset in a brand new asset class. Are we late cycle or early cycle? Well, we're late cycle relative to 30 cents. It's up over 10x. At $4, barely holding on the $4. I don't even think it looks like it's broken out. It's broken out from the triangle compression, symmetrical compression that we talked about for all those months, but it hasn't broken out with regard to historic price points. Haven't gotten above that 575 and got into real price discovery, 7, 8, 9, 10, 12, 15, 16, 20, 25, 35, price discovery, real price discovery for an asset, part of an asset class that has no history. People trying to price an asset that produces revenue, that capitalizes much like Fidelity used to with transaction fees on its user base. Except the general public reaps the rewards instead of a centralized entity. Why is this not the trajectory we're looking at, or we should be looking at? Check this out. Why is this? Why is it late cycle and not early cycle? Resistance flips support with the higher high at $33. So that's the spec play. Does it mean we can't have a significant retrace? $4, and it was at 30 something cents late last year. So I like to approach these markets with I'm prepared for an 80% drawdown. If they take 80% of my money, I'm expecting it. But I'm also thinking to myself that these markets are the markets where what I want to own. And I don't think of this as I want to deploy capital. I want to invest in these markets. No, I think like Buffett does. I own this shit. I want to buy this. This is what I want to own. I own Curve. I don't own a Curve asset. I own a part of the damn company. I own a piece of the protocol. That's what Buffett says. You're not buying stock, you're buying a part of a company. I'm not buying a stupid crypto asset, a a three letter acronym or ticker symbol. I'm buying a part of the fucking protocol. I don't want anyone else to tell me otherwise. That's the way I see it. That's my interpretation. That's what I try and teach you guys. You're not buying investments. You're not buying something that goes up and down in price. No, you're buying a revenue stream. You're buying a business. This is a business. I don't need anyone to tell me otherwise, because that's the way I see it. It's obvious. Kaizen's in the house. Pleasure. Professor J. Morning Cap. Martin. Good morning, brother. Pleasure. Yo, Tam. Hello. Kill us. Whoop, whoop. Jonathan. Morning. Curious what your core cash flow positions are, how that Geist stash is doing. So Geist has been getting hit pretty hard. Let's take a look. I was able to compound a little bit of cash back into Geist. Had some cash that built up from my Spirit swap position. Spirit got hit pretty hard, but I bought like a 30 chip worth of Spirit. I think it's worth like 80 at this point. I saw it as high as like 150. It was up like 5x. But the In Spirit cranks out returns, which is nice. So I was able to pad my Geist position with a couple of thousand. Small position, 14 grand. I originally put in about 22 chip, and I saw it down to like 12. So at a buck oh six, I bought like 22 grand worth of Geist. Now it's down to 54, so I've been dollar cost averaging up to 14 and change, 152 bucks. Nothing to complain about. I mean, platform fees is 198% return ROI based on platform fees, and another 400%, 478% based on early unlock. So that means there's a fair amount of this return coming from people that are selling their Geist. And that tells me it's going to depreciate further. You know, so I'm not deploying big numbers. It's a relatively small number for my books. Um, as these numbers start to converge, like if I see this at 300% and this is at 250, that's when I'd throw a chunk in, like 100 or something. That's when maybe I'd reallocate from my Ampleforth position because that's a learning experience. Not that I don't entirely, not that I don't like it, but it's not. I was hoping it was going to behave differently. Let's go over here real quick. Obviously, I'm digressing. I digress horribly. So now the yield is irrelevant. So what the pertinent metric is the utilization. So during periods of negative rebase, you are 85% exposed to the negative rebase. Um, so it's not the most exciting. I was hoping to see the high yield be retained during a period of negative rebase, as people were trying to use the money market to short and long the asset. And that has not proven out. So my hypothesis was invalidated. Uh, and that's okay. Hypotheses are always invalidated or invalidated. But albeit it's still interesting, the utilization rate being at 15%. I mean, people are actually longing and shorting the asset because otherwise, why would there be any utilization? Um, so that's something that's meaningful. Whether we'll only know in hindsight, months, years down the road, whether it's better to just hold the asset naked. Some would say, yeah, it's a no-brainer. So sure, great, but there's 15% negative rebase protection. That's meaningful. It's not definitely. It's not. That certainly is not nothing. What is it? I don't know. Well, we'll know after some more evaluation. So I don't have much. Um, I always told you guys 1% or less. Um, Connect. down to 80. All right. So there was at 130 at one point, down 52. I'll let it sit for a bit. What do we know about the asset's price point? It's highly cyclical. So I always told you guys that it's transitory periods of opportune liquidation. You guys, should I say that again? Transitory periods of opportune liquidation. So the price will go up. It's guaranteed to go down. Let's go out to the daily. So look, we're out there and we have our transitory spikes up. I think up to $4 at one point back when it launched. That's some crazy sauce. We have our transitory periods of opportune liquidation, $2. So we'll have our spike when people want to accumulate, and it's better to watch the market cap. So like if you just go through a period of positive rebase and it just stays at like $1.15, stays at, and it just starts to go constant at $1.20, that means you have massive, massive market cap growth. Because if it stays at $1.20 and you have positive rebase, positive rebase, positive rebase, positive rebase, you have market cap growth. So that's how you really view the growth of the asset. It's not the price point. The price point is irrelevant. The price point highlights opportune periods of liquidation. So, I want to buy into, the ample pilled. I want to see what it's like. So I'm not in a rush to liquidate. The only reason I would is if there's something that presents itself and turns it into opportunity cost, having that position. Because I know over time it'll go back to a price point that's opportune for liquidation, like I keep saying. But a Geist position might prove rational to reallocate to, especially if these numbers start to converge. That means there's less and less Geist being liquidated. And it's becoming more, the locked Geist is becoming predominantly platform transaction fees. So that means it might be a good opportunity. We might be getting towards bottom. Come on, bottom maybe 25 cents, 30 cents. Are we really going to lose another 50%? All right, in any case, 672% compounded daily. If I daily compound this, that's a lot of APY, boys and girls. So let's see how long it lasts. Oh my God, I don't have the damn main screen up this entire time. That's what happens when I don't pay attention to the stream that's on this screen, and I got main content on this screen. Sorry, guys. I'm not going to go over all the content that I was clicking over, but I would like to see this APR converge with this. Like this go down to 350, and this go up to like 250. It's already at 2. But as these converge, what that means is there's less and less Geist being liquidated, and we're probably getting towards the bottom in the Geist price. So I'm expecting somewhere around 20. Let's say if it loses another 50% down to 25 cents, I'm going to be quite surprised. And I was showing you guys before I flipped the screen, ample fourth on Ave, transitory periods of liquidation. So clearly it's back down. It's down at $1.86, which means it's a period of negative rebase, which is supply contraction. So as you can see here, I think I had like 93,000 at one point. Now it's down to 91. The supply is contracting, which will encourage price appreciation over time. And it'll reintroduce another transitory period of opportune liquidation. It'll be $1.50. What I want to see is I want to see it go to like $1.20 and just hover there. I mean, there's a lot of periods where it's there. It's a good lot of expansion. This is why people say to view the market cap, and the market cap chart is much more indicative of the growth and strength of the asset rather than the price point. Anyway, Jonathan, morning. Curious what your core cash flow positions are and how that Geist staking cash flow is doing. So I hit that question, talked about Geist. Core cash flow is predominantly is curve at this point. It just prints cash. It's like on a weekly basis, give or take. So that's how core cash flow is doing. Um, Curve is core cash flow. It always was and always will be unless the market changes, and then we have to be considerate. Frax has turned out to be a heck of a cash flow position. If we go over to VEFXS, that's like almost $1,000 a week. That's nothing to sneeze at. That's pretty cool. Fixed Forex is probably going to be a cash flow position as it grows. It's not the largest position. I have only 50 of them, I believe. 54. Not a nothing position. It's $1,800 an asset at this point, but we'll see. We'll see. Where's fixed Forex claim? Oh, that's it. So I got 431 euros. But that's after like weeks. So we'll see what kind of yield it ends up becoming. But this is something to just sit on. It's only just beginning. I'm quite interested in the Geist position. I'm tempted for the Blizz on Avalanche, but that's got a lot more depreciation to go. These two here, let's take a look at that real quick. Oh, I have it in Avalanche here. Let's switch over. Avalanche. Let's take a look at Blizz. This is going to be a lot of depreciation to come. Reload. All right. So these two numbers, actually, it's not that bad. These two numbers got to converge for this to stop bleeding. Look, this is already down literally to to Geist price. That's incredible. But look at the market cap. 14.1. Much smaller market cap. I'd like to see this go down to like 20, 30 cents. Maybe I would take a position down to 20, 30 cents if I saw this at like 1,000%. Wow, this is much more real time as compared to Geist. That's interesting. If I saw this down to like 1,500% and this at 1,000%, I'd probably take a position. Maybe start to dollar cost average. I'd love to see this get down a little bit more if I deployed before I deployed anything. And this maybe I just it'd be opportunity cost because this is transitory periods of opportune liquidation. I might not want to wait for this to go up to whatever, back to 130, 140 for what? Just to play around with the asset? Anyway, Shishk, thank you very much. I appreciate it. It's good to be back. Alpha, glad to make it again. It's a pleasure. Raul, Andrew, Ryan, the champ. Oh, so many people. It's wonderful. Andrew, how do you rationalize opportunity cost of being an incumer with day 1 million versus trading with 100K in order to get being an incumer? Yeah, well, I wasn't an incumer at one point, and I did have to trade in order to get to where I am. I don't I don't have much capital gains overall. Like for instance, when all's said and done, and I pay like a final 2022 tax bill for 2021, it's not going to be a lot of capital gains. It's going to be a fraction of the portfolio, which is pretty cool because most of the assets are not moving and they've had long-term positions. Um, so there's just cash flow from unrealized capital gains, which is awesome. And that's what you want as a business owner operating your capital as a balance sheet is cash flow from unrealized capital gains. That's what all the wealthy people do. And that's what we've been talking about for the last 2 years, how to generate cash flow. And we haven't really talked about minimizing tax obligation, but that's the obvious conclusion. If you can make money off of unrealized capital gains, that's the obvious optimal tax treatment. You don't pay any tax on unrealized capital gains unless the Democrats have their way. And if you could generate cash flow from it, woo, there you go. I don't know. I don't have an answer for you, Andrew. How do you rationalize opportunity cost? I don't know. I think you might have hit on the ultimate difficult question to answer. It's all about risk tolerance, so you need to have that in mind and how much you're willing to lose and all of the philosophy I've spouted over the last 2 years. Never go all in, never spread too thin. The rationale, never invest anything you're not willing to lose. I mean, that's a perfect example of what I got up on the screen. I popped 130 chip here into Ample, it's down to 80. So, but I expect it to also appreciate transitory periods of opportune liquidation. So I expect it to go back up. I don't really see any capital loss here, although it's not the worst idea just to lock in the loss and compensate for some capital gains I've had over the last year. So a loss can be good in some regards. I don't have a good answer for you, Andrew. I hope as I continue to talk today and in the future, you'll find an answer for yourself, because that's really all we can do is find our own answers. Voku from Italy, my man. It's a pleasure. Raul, what ledger are you using? I do not import MetaMask to the ledger. I use my ledger through MetaMask, and you could use the ledger, any of them. They're both cool. Ledgers are cool. I like ledger devices. Is the Ethereum ledger app also usable for other mainnets? I don't know about an Ethereum ledger app. No, the Ethereum, the Meta Ledger Live, you can't do shit unless it's on mainnet. So Ledger Live is useless. I never use Ledger Live except to manage the hardware device. I use Zapperfi or DBank, and otherwise I use a MetaMask to switch your networks. So import your ledger addresses into MetaMask, and that's the name of the game. And I just showed you guys because I went on to Blizz as well as Geist, which is Phantom versus Avalanche. And all you do is go to the top bar and you have your networks selected and you can switch between your networks. And that's the way that works. Thoughts on ample price action last week? Sheesh. So we've obviously entered periods of negative rebase. I find it interesting. I have, you can hold it and wait for the price action to go back up, which is inevitable. As we've said a couple times this stream, and as we always have said, it's an asset of channeled price action with a high and a low as supply contracts and expands, and that's the nature of the asset. So we have a transitory period of opportune liquidation if it goes higher. Great. And the whole point is we want, in my mind, to be exposed to the positive rebase, and we want to mitigate exposure to the negative rebase, which is why I'm actually still intrigued by a lending position. Most folks in the crypto space define Ample as a trading asset, and I'm curious of it as a lending passive asset. If we could have, so obviously when there's positive rebases, you're going to have maximum APY. So it's not going to be a 6% daily, but if you can get 2% daily, hands off the position, that's meaningful. You're paying a 4% premium for that hands off pleasure. But look, during a period of negative rebase, you have 15% coverage, 15% protection against the negative rebase. So as long as exposure to the positive rebase is greater than the exposure to the negative rebase, your position is going to grow over time. And I think that's what it means. And if you're willing to pay the premium for the lending position to be the passive, then you can conclude that it's potentially worthwhile. And the odds are you won't outperform an active position. Most of the time, passive positions don't outperform an active position, but that's okay. The whole point of paying the premium for the passive position is it's passive. You don't have to do anything, and you potentially have long-term capital gains exposure, and you definitely are not doing any work, and that's the whole point. Pay a premium not to do work. I'll pay a premium all day long not to do work. That's the deal. Captain, I was both happy and sad to hear about your entry into Geist, the position I have. Happy because you share my conviction for this. Well, don't be sad. Were you sad because it's depreciating? Sad because you yourself talked about your horrible timing. Well, not that horrible, because I kept the entry a relatively decent price. I put a 22 chip in. But now that I understand, or at least see, the difference in the Lockgeist versus Stakegeist APR and the significance, I know where the bottom will be. The bottom will be when these prices converge, because that means there's less and less locked APR coming from liquidated Geist. So that's quite interesting. Or, vested early, the 50% penalty. So I think this asset, as well as Blizz, that is probably the same team. Um, I like these positions very much. Aave doesn't give you any access to platform fees, but if you could gain access to platform fees on Phantom and Avalanche using basically the Aave protocol, because that's what these are forks of Aave, that's a big deal. Now, the art of these positions, Blizz and Geist, are entries. And as I've said, as these APRs converge, you're going to find your entry, or at least somewhat of a bottom. 20 cents, 30 cents. So that's the deal there. It's all good. Yeah, I fixed it, Shisha. I see. No graph. So more pain ahead. The Avalanche Fork Blizz I deem also interesting. Price drop was more sudden. Yes. So I described that thus far. Quantified. Hey, Noah. I'm the frog who tagged you in the yield post on Twitter, and I'm in Discord on Decrypt. Hey, man. It's a pleasure. Yeah, I've seen your posts lately. I've been trying to respond as best I can in Discord. Gotta get back to work. Was it? It's almost 12 o'clock. Damn it. Thought it'd be nice to bring my personas together so you know who's pinging you. My man. Well, you ping on here a fair amount, so I know you from here, Quantify. But now I know Crypt on Discord and on Twitter. It's all good. It's all good. I appreciate you too. Appreciate everyone here. We got to appreciate. We got to watch our portfolios appreciate. I don't know, some shit like that. Sounds good. Um, let's keep it going. Professor J, rotating versus reallocating versus just allocating? Reallocating sounds like has capital gains exposure. Rotating certainly has cap gains exposure. Allocating sounds like it has minimized exposure, shooting for the long term capital gains treatment. Or maybe the unrealized capital gains for an extended period of time. Can you imagine curve goes to $30, crashes to $10, and then over the next 3 to 5 years goes to for a 40, 50, 60, 70, $80, and someone has the balls to not sell? Man, that's unrealized capital gains right there. Maybe it stays cranking out 30, 40, 50% yield as it goes to $100 in 5 years. Ooh, 30% yield on $100 curve is going to be one heck of a revenue stream from a huge amount of unrealized capital gains. It's possible. And that's what I hope for in the coming years. Is there a phantom faucet? Yeah, go on the Spooky Swap or even the Spirit Swap Discord. You could get some phantom there. They have a faucet. Klaus von Bob. Yeah, I fixed the browser. Crypto, what's your opinion on Tokamak? I don't really have opinion on it. I haven't had time to dig in as much as I'd like, and I'm not really thinking about it from an investment standpoint. And I see the bribes with the Votomac. I see what Frax did. I think it. I don't have a capacity to provide an astute opinion. It's there. It reminds me of like the way Ohm was when before I really understood what its systemic role was or its significant was to the ecosystem. But that's okay. As I always tell you guys, I'm never early, never late, and maybe it's something significant in the next couple months, and it's worthwhile to allocate. Look, I nailed Keeper, and I was definitely not early. I was definitely not early to Keeper, but that's up like 300-400%. That's a nice win. Um, being too early could sometimes be indistinguishable from being wrong. It could be very painful to be early. It could also be a missed opportunity. So there's no certainty of anything we do. Anyway, Space Donkey, how would you behave if there wasn't a capital gains tax in your country? Compound the shit out of everything. Revenue streams are still everything. If there wasn't a capital gains, I'd just be compounding more and more and more. Thoughts on FPI Frax Index? Maximally bullish. I think I like Daniel working with you know um, UST. I think that makes sense, and that's fine. And I think Sam with Frax is going to do just fine. And I've had a large Frax position, FXS position for a bit, way before it was on people's radar. So this is all okay. I think that's a big deal. Now, what do I think about the price of FXS currently? The title of the stream. Late cycle entries, drawdown expectations. You're buying after a huge run up. So if there's a depreciative impulse, a deflationary event, anything that causes the market to want to retrace, it's going to get hit hard. And that's just the truth. So I wouldn't buy anything at this point unless you're prepared emotionally for a 50, 60, 70, 80% drawdown and you know how to handle it. Now, it's very easy for a lot of people to handle the 80% drawdown, especially if they've been in the market since like 20, 20 multiple years. Because if you bought Bitcoin at $200, you don't give a shit if it goes to 100 grand and back to 30. Do you really care? So if you bought Curve at 30 cents, do you really care if it goes from $30 to $10? If you bought Frax at $1 and it goes to $50 and it goes back to 20, do you really care? So that's another, that is a benefit of being early. Never early, never late, but there's benefits to being early, and sometimes the benefit of being late is that you decrease risk profile. If you're too early on an asset that's a rug or has a security issue, that's your risk profile taking a bite out of your ass. So that's why I like to never be super early. I wasn't early on Spell. Spell was out for 3, 4 months before I took my position. Never early, never late. So that sweet spot hit right on Spell. I wasn't early and I wasn't late. The same with every position I have. Every position I have. Now, I could have made multiples. I know people that have an increased risk profile as compared to myself have, 4 or 5 times the wealth that I have. Man, they deserve it. I'm not going to name names, but there's one dude that I know that deserves it big time. I don't know. I'm very proud of him. I don't know him that well. It's a Twitter personality, but I'm proud of him. It's because this is not an easy game, and everything that I know about him, there's few people that do what he did, and that is something to be very damn proud of. I mean, seriously proud of, and he deserves it. It's not easy to do what he did. Anyway, that was just a little rant about a person who I will not name. So you guys have no idea who I'm talking about. Anyway, it was good to express it, though. I'm happy I expressed my feelings. Are assets like Luna that generate yield through blockchain use more interesting than those that generate yield through inflating supply? Yeah, man, inflating supply is useless. Useless. An asset that's generating yield from inflating supply, you want to avoid and not touch. Period. Talking about inflation. Inflation destroys the value of the asset. I don't have much else to say, Sam. That's a big hard period right there. Eric, hey Noah, first time catching you live. What is your plan for the bear market? When is the bear market? What does a bear market look like? The bear market, my friend. It's not as cut and dry as you may think. Do you think that the curve and convex APRs will decrease considerably? If not, why? I expect the yield to actually go up in terms of base APY. I expect incentivized returns denominated in CRV and CVX to be diluted significantly. Base APYs will go up because during a bear market, there's still a significant amount of capital churn. which did not exist in 2019. The monetary velocity in the crypto space has reached critical mass. It's a self sustaining market. People are trading opportunistically. They have a capacity to long and short using DeFi protocols, which means there's going to be velocity during a bear market, which means base APY is going to be there. There's going to be significant yield on assets no matter how bearish a market gets. And what I don't know what a bear market is, because all I know is a bear market is a precursor to a bull market. You have bearishness before you have bullishness. I don't like to define um, I don't like to define these markets like that. I like to take a market day by day. I believe that's the best way I could describe my sentiment about these markets. Captain Weber's in the house. It's a pleasure present, sir. It's always a pleasure, my friend. Klaus, Blizz devs are nons, multi-sig on Geist. Yeah, Blizz devs are obviously a fork of Geist, and Geist has a nice multi-sig. I don't know what to take from that in entirety, but it is interesting. Interesting, right? Something should be taken from that, Klaus. I don't know. Maybe Geist, maybe Blizz is off the radar. Maybe Geist is really something meaningful because of the multi-sig. I don't know. Let's take a look at spell price action for a second. Although I'm going to talk technicals on this. It looks actually pretty good. Joshua, the reallocator. 3D fam, any opinion on Wonderland? Not really. It's not something that's a significant part of the portfolio. It's not on my radar too much. From a functional standpoint, I think Wonderland and Ohm, very different assets. One is, I mean, really what Daniel's doing with Wonderland and the memes and the social media and their RPG game. I don't know. There's some brilliant stuff, and I think it will have a significant impact on the price action of the asset, especially as compared to Ohm. Albeit Ohm's doing interesting things unto itself. I think both are extraordinary experiments with protocol-owned liquidity, protocol-owned assets, or the concept of just treasury building. That's extraordinary. That changes everything. I think everything is completely different. A protocol owns their own liquidity, so it's like there's no more pool twos. There's no more inflating your supply to incentivize consumption of a protocol. You can literally use your treasury, the protocol's treasury, to purchase liquidity at a discount. So what you're doing is converting the treasury uh, into consumption rather than selling it to incentivize consumption. It avoids the inflationary collapse of most price points of new protocols trying to get off the ground. Massive, massive deal what Wonderland and Olympus DAO can provide to protocols. And we're seeing that with all the Ohm forks. The Ohm forks are proving very useful. And in many regards, what are we seeing? Are we seeing sovereigns build? Are we seeing sovereign treasuries? A sovereign, as in like a sovereign nation? Is that what is going on metaphorically? The emergence of sovereign protocols? Only know in a couple of years, but whatever it is, it's some fascinating shit that I want to be part of. Uh, Fiscium? Noah, please, can you speak on Moki? What are your thoughts? Well, Moki, I have no interest in whatsoever. And all I know is there's some significant complexity with regard to very large market actors like Tetranode and governance, how it's managed on Curve and Convex. And Banteg has made mention of some very meaningful opinions, given that he's a significant market actor. Um, that's about it. You can see the price action of what he caused clearly in the CVX chart. That's so obvious. But what he did, I like what Banteg talks about, because if you could just Shut out a person from governance is really decentralized finance. But what Moki did was obviously pretty pretty nefarious in most regards. Can't do that. So, but does that mean you could, as a decentralized finance infrastructure, we have a right or a capacity to block someone from interacting with the protocol? I don't know what that means. In hindsight, we'll be able to evaluate how good uh, our decisions did in creating decentralized protocols. Um, but for now, I think we're too early to assess the impact of the Moki event, so to speak. Um, Great stuff today. You're welcome, uh, Voisu. I'm not going to get your name right because obviously it's Italian, my friend. I'm sorry, but it's a pleasure. I hope I help. Jake, I hope everyone was protected from their Paraswap airdrop. Yeah, that's just ridiculous, bro. Absolutely infuriating because Paraswap is a big uh, tool that we as crypto market actors are dependent on. Absolutely ridiculous situation. Degen to Incumer, CryptoTube. Yeah, not really Degen for myself, but that person I was mentioning, yes, most certainly. Joshua Bessie, he's impressive. Very much impressive what he did. Let's see. I was going to guess Messi. Killis, do you think long-term hold of Apple could be interesting? Yes, I think it could be interesting. Speculatively, the market cap could grow. 10x, there's your 10x. That's how you'll have a 10x supply. You won't necessarily have a 10x price point, and that's the way the asset works. That's why it may be more interesting to look at the market cap rather than the price point. Price point being opportunistic period for liquidation, but the supply being where you're going to get the growth of your position. Quantified. If you had 1 mil and were looking to optimize your portfolio at this point in the market, risk off, what best place to park capital? Looking at the Paxos curve, I don't know. I can't give an opinion regarding that. I don't. I don't know. I definitely don't know where the best place to park capital is. No one does, and you'll only know in hindsight how well you did. I'm going to wrap this up in about 2 minutes. Kill us. That's right. Fascinating shit. I want to be part of too. Know that, right? This space is incredible. My brain is struggling to keep up, but I love it and try my best to get involved. I say the same thing all the time. I struggle to keep up with this stuff, but you know, it's fun to talk about it. That's why we do what we do. That's why we're here on the stream. That's why Discord's hot. I got to get to Ask Vids. Oh my God, I haven't touched them. I'm sorry, guys. I'm going to get to those Ask Vids. Ryan's in the house. I've been trying to figure out this ample situation. How is the APY so low on Aave? Because no one's borrowing it. And they'll probably only borrow it to long or short it, which means there's still 15% utilization, which is a big deal. Um, which means you have 15% protection against um, negative rebases, which is meaningful. I don't know how this plays out. Um, this shouldn't. No one should have deployed more than 1% of the portfolio. I told you guys it was guaranteed to go down in price, and now we're seeing that play out. I don't think it goes much lower in price point, but price point is only a part of the story. The supply contraction and expansion, that is the majority of the story. That's the whole point of the asset. Supply goes up and down. One curious view: Moki incident is a bit like ETH versus ETC. Not really, my friend, but whatever it is, it's going to be potentially a pivotal point in DeFi history and how protocols respond to what one market actor did by trying to strip away his governance rights. Um, we'll see. We'll analyze further as time goes on. Anyway, it's a pleasure. Monday, November 15th, 12 p.m. As always, after party on Discord. Tell everyone to subscribe. I'm going to get to your Ask Vids as soon as I can today. I promise I'll get to them. It's only Monday, so the start of a new week. Hit me up on Twitter, and we'll keep this party going later in the week. It's a pleasure. I will see you next time. Catch you then. Peace.